Welcome to Investors Insights, where today's topic is Fed up, stock supply down. A lot going on this week. Before Ty talks about the supply of stocks being down, and I talk briefly about an election update, Trey, very important week for the Fed. They are up to speak, and that's why we said Fed up, stock supply down. So talk about that, the Fed speaking, and an inflation report.
Yeah, absolutely. Thanks, Bobby. Massive couple weeks of data that last week and this week. On Wednesday, we'll get the Federal Reserve's announcement. That same time, we'll get the consumer price index or inflation number will come out on Wednesday as well. It's June 12th. So a massive day in terms of those two things happening at the same time. The Fed officially does not have that inflation data ahead of time, so their decision will be made on prior data. Many market participants believe the Fed likely gets a heads up on what that information is going to be. So, what the market has reacted fairly strongly in one way or the other when inflation numbers have been good or bad. So something we've definitely noticed the market reacting strongly to. We don't expect the Fed to make any decision. However, last week, we got three bits of information. One, the Central Bank of Canada cut rates. The European Central Bank also cut rates. And so that this will be the first time that the Fed, if they do nothing, will be going against larger global central banks and what they're doing in our neighbors. And so that's kind of an implicit hike in rates. If other people are cutting and we're staying flat, that's a relative hike. But then also on Friday, we got the jobs data, and we got something that was kind of confusing. We got a very strong jobs number. 272,000 jobs were created last month. That's a great number. A lot of times you get a strong number, it's because they are correcting for previous month's errors. This one did not. It was just a strong number. However, the unemployment rate rose to 4%. And so a little bit of conflicting data, some good, some bad. So it kind of gave everyone that's watching what they liked. You could kind of read whatever you wanted out of it. If you want a strong economy for good purposes and good for the market, then you could say it was a strong print. If you want a weaker economy so that the Fed doesn't have to hike rates and the Fed can cut rates, you got a little bit of that. So we got a very mixed bag of data that's all going to come into clarity on Wednesday, because we can talk about what the Fed is reading and what the Fed is seeing. But on Wednesday, the Federal Reserve Chairman Jerome Powell will tell us, hey, this is what we're looking at. This is what we think. While we don't expect action, this will be the first major meeting since other central banks have changed. And so he hopefully will talk about why the Fed may stay, what they may do, where their cut is, if any at all. So very big week in terms of global and U.S. economic data.
Yeah, no doubt about it. It's all about the Fed this week. We'll be watching that closely. So last week, concerns around politics and the election came up in almost every meeting we had with clients and business partners. And it's something we expect those conversations around market volatility and the election to continue. And we're lucky to have great research partners to help us in analyzing market performance in election years. So I want to share this chart that shows the average market performance in different election years. If you've been watching our vlogs, we have been covering market performance in election years for some time now. You might remember that historically, market performance has been better in re-election years like we're in, seen in that orange line on this chart. And that's when the market knows the policies of both candidates. Also, as shown in this chart, election year lows have usually been set 72% of the time in the first quarter. So one common theme in all election years is that historically the market has some near-term volatility in the fall leading up to the election, but historically rallies after the election for a few weeks. And so we use this historical analysis in our investment strategies. So no guarantees, but it's important to look at market history and realize that election years are not a reason by itself to worry about market performance. There are many other factors every year that impact the markets, and we'll obviously continue to update everyone as the election news cycle continues to heat up here. And so, Ty, talk about something that I don't think a lot of viewers realize, and that is the supply of stocks are actually down. Talk about that.
Yeah, so we get a lot of questions about what are some drivers for the stock market here, and one of those answers could be the stock supply. And so, it's still a market, demand and supply. And when you have fewer supply, usually in the same kind of demand, then prices can rise. And so as you see in this chart, the number of publicly traded companies in the United States has fallen by about 36% since the late 1990s. Peaked out at about almost 9,000 publicly listed companies. We're down to about 56, 5,700. And so that's a, an interesting thing to be aware of. And so where are all these companies, kind of going? Well, we have consolidation, of course. You have some companies that fail, but we've seen an increase in companies just staying private for longer. As you can see in this chart, private equity is up about 13% year over year, consistently for the last 20 so odd years. And so that's one thing. A lot of companies are choosing to stay private for longer. And that's just something that, is going to affect the ability of a normal retail investor to get involved in. And that's something that we certainly want to keep an eye on. On the other hand, you see this bond supply chart, and bond supply just keeps rising, whether that be treasuries or corporates. That'll be interesting to see as we have an elevated rate environment for the first time in quite a while. If, as these bonds kind of are called or come due, are companies going to look at, reissuing bond? Are they going to maybe issue some more stock? Or are they going to kind of just use some cash on hand? A lot of companies are flush with cash, and that's something that we certainly want to keep an eye on as well.
Yeah, we always like to follow trends here at Foul Play Partners and stocks. The supply of stocks being down is obviously a trend we're watching carefully. So, but as we said, a lot going on this week. It's all about the Fed. We'll definitely have an update for you next Monday and give our analysis on the Fed decision this week. So thanks for watching.